Hi, and welcome to the Midday Market Update for September 8th, 2020, where we're going to discuss everything that's going on in the freight markets today and over the Labor Day weekend. My name's Kevin Hill. As always, here with the dude, Michael Vincent.
How you doing, man?
How are you doing?
Welcome, everybody, to the show. Live, interactive show. We're on FreightWaves, LinkedIn, Facebook. Get your comments and questions in, and we'll get them discussed. We got a great show. Did you have a great Labor Day weekend?
I had a great Labor Day weekend. How about
Cool.
you?
I did.
I mean,
It was
we're going to
awesome.
start the week off great, or fantastic here.
Oh, yeah, absolutely.
You know, we have a fantastic show. We have, of course, the news up first, and then some economic news, the latest economic headlines that we'll discuss with our lead economist, Anthony Smith, and then we have Eric Kulisch.
Yeah, talking about air cargo.
Air cargo. He's our air cargo market editor.
Yeah.
And then followed with that is some really exciting news that we'll start off with the headlines as well.
Yeah, Alan Adler in the house.
Yeah.
Well, he's not in the house. He's virtually.
He's virtually in the house.
Virtually in the house.
Yes, and he'll be talking about the GM stake in Nikola.
Yeah, exactly.
Yeah.
And we'll be talking about, and then we'll move on to other electrified vehicles as well, which is an interesting story, the divergent paths that are going on, right?
It is. You know, it really is. So and that's our leading article today on FreightWaves.com is GM invests in Nikola, and they are actually going to be the ones, the OEM, or the ones actually manufacturing the Badger pickups, and also, I think the fuel cells.
That's exactly right. Right. So they've got the Badger. So what they've done, right, is they've got $2 billion worth of in-kind services is what the auto manufacturer is going to do. But we'll dig into that deeper with that. I don't want to steal his thunder, but it's a pretty big deal, and it's pretty cool for Nikola as well.
It is a very big
deal.
Both
sides.
And Alan wrote the story, broke the story on FreightWaves.com. He's been following Hyliion and Nikola and Tesla and all the legacy auto manufacturers very closely. He is also probably will have some news on Navistar. Coming up as well. But that's at the bottom of the hour. The other major headline on FreightWaves.com is driver exits could extend the capacity crunch. And we do know that there's a huge capacity crunch out in the market right now, ones we haven't seen since the early days of beginning of the year of 2018.
Yeah, absolutely. I mean, as the article states, good article, excellent. Get. I mean, as always, but you know, it's out there. Zach Strickland on FreightWaves.com, but it basically stated, shippers were expecting things to drop off in the summer. Whoops. It's
a definitely whoops.
Right?
I mean, you have outbound tender rejections around 25%. Which are
they're 26, above 26 right now.
26% running into the Labor Day weekend. It'll be interesting to see how post-Labor Day performs if we see a little bit of a settling.
Right. Yeah, I mean, you see that normal when if you're a Sonar user and you're looking at the outbound tender volumes, you'll see a dramatic drop, right? But that's the holiday. It happens every year. It just happened a week later this year than the previous 2 years.
Yeah. So here, it'll be interesting where we finish off September, I guess. I mean, on the DHL Pricing Power Index, we have it pegged at 85. It's been 85 a couple weeks now.
It has. With a 75 3-month outlook.
A 75 3-month outlook. So I think capacity will ease a little bit over the next 3 months. Or it could. Let's just say it could ease. And I'm not saying come down to 5% again, but ease a little bit.
Yeah, I got you.
Yeah.
1.4 million jobs added to the economy in August.
Exactly right, yeah. And
is what he's talking there. And many of the trucking jobs that were lost in April have not really actually refilled.
They have not.
But according to the Bureau of Labor Statistics, employment levels for trucking were still 5.8% under February in July on a seasonally adjusted basis, but recovering only 0.5% since April. From an annual perspective, employment levels are 6.3% under where they were at the end of July 2019. So it's still down there. There's a slow employment recovery. But it's obviously it's completely different than the trucking volumes.
It's completely different, and driver turnover. They also Zach also talks about in his chart of the week article that this is out of. And
yeah, absolutely. I have the numbers right here.
56% in April was driver turnover. That's recovered a bit to 70%.
Right.
The latest data.
From June was 61.5, and then July went up to 76.6%. TCA members reported a driver turnover rate of 80.7%.
Yeah, so that's recovering.
That was July 2019, so it's very, very close.
Yeah, it's very, very close. So we'll see. You know, I think a lot of drivers haven't re-entered the market yet from those doldrums of April, and there's a few theories about that. One of them being the extended unemployment benefits that are available, though.
The PPP.
PPP.
PPP. That's right.
Yeah.
So many acronyms to remember, but the PPP is one theory right there. But I think what Zach is pointing out here as well is, you know, the carriers are busting at the seams with freight right now.
They are, yes.
Right, and driver turnover has gone from 56% back up to traditional 80s. 76.9 or whatever it is, 76.06, but close to 80. So driver shortage, driver turnover 80%. Not bringing them on fast enough, betting on it weakening is all adding to the capacity crunch. And there's really not, you're talking about freight levels could start to weaken, right, over the next 3 months, because you got it at 75. 75 is not weak.
No, it's not weak
on
at
a
all.
DHL.
It isn't. I mean, that's what
power index,
it eases a little bit.
Yeah,
right. It eases a little
bit. It's
bit.
just lesser extreme to the carrier side.
Exactly.
Yeah.
Exactly right. You know, spot rates are up 33% year over year.
They are.
You know, you just have a lot of pressure in the market right now, and it's how long will it last? That's really the key.
It is.
How long will it last?
If I knew exactly what that was, brother.
I know, right? We wouldn't be sitting here. It would be.
Yeah.
You know.
Yeah, we got the best data, but we don't have a crystal ball yet.
We don't have a crystal ball.
We're working on it. The data science is working on that crystal ball. Let's move on to this AB5, dude. What is AB5, and what the heck is going on right now, right? So they're still arguing the AB5. They're trying to keep it out of California, which is the whole, does it apply to trucking and independent operators? Doesn't it apply to them? One side that wants it in place says it doesn't, but it appears like they can't really give any reason or don't want to say here's why it doesn't. And, you know, right?
I think that the ABC rule, or the 1, 2, 3, it is the ABC, not the 1, 2, 3. But the B part of that is where, you know, independent contractors, you can't hire independent contractors who, their position or their duties are the main focus of the company, or, you know, operationally, right? So if you're a trucking company, you know, what you do is truck things around.
That's right.
So a driver can't be an independent contractor.
Right.
And so a software company as well in California, if they do a 1099 with a software engineer, that can't be an independent contractor. And the more it's talked about, the more confusing it becomes, because everyone's trying to argue over B, or that B,
the B prone,
the B prone, yeah,
right,
the B prone, and there's not a good way. I think it's just unclear. Or if it is clear, nobody wants it.
Exactly. So, I mean, what they're looking at here is the way it's written, and nobody wants to define anything, right? Exactly. A trucking company could go out and hire an independent accountant.
Yes.
But not a truck driver.
Not a truck driver, yes.
But the whole argument stems from the F4A rule, which was the FAA that said it's got the smell test of affecting price and services.
Yeah, interstate commerce.
Commerce and price and services is where the trucking companies, and I'm not sure I necessarily disagree with them, are saying that it's going to affect our services and our pricing if we can't go out and do these things, right?
Yeah, exactly right. And that's where the injunction comes from. It comes from the FAA regulation back in I believe the 80s during the deregulation period, and whether that really applies or not, I mean, that's one of the arguments, or that's one of the reasons why this hearing that you can see on FreightWaves.com comes from. And there's just no good answers for it.
Not yet, right?
Yeah.
And so the law firm of Scopolitis is basically saying, okay, two judges made some comments that make them think that they're leaning towards allowing it, right?
Yes.
The judges are basically saying, no, this is a discovery. This is not the end of talks. We're talking and trying to figure this out, which I can see that point as well, right? But the fact remains that if it goes into effect, it can severely affect carrier operations.
It can, and you've seen that with Uber and Lyft as well. Is that this AB 5 ruling and law regulations directly affects Uber and Lyft. And really the entire gig economy for California, which is a huge part of Silicon Valley as well, outside of trucking.
Yeah,
So
it absolutely is. It absolutely is. Absolutely is. What do we also got it here in headline here? Comcar's final unit will be sold to TFI subsidiary.
Yeah,
is
TFI
what's going to go
been on
there.
a buying spree.
What's that? Yeah, they have. They absolutely have.
And basically, getting distressed assets is a good way to grow and establish.
According to court documents filed in connection with Comcar's bankruptcy, TFI is on the verge of making another acquisition. So after having bought flatbed carrier CT Transportation and truckload carrier MCT from Comcar in late June, the contentious sale of bulk carrier CCC Transportation brings to a close the breakup of the major assets of Comcar, with TFI buying 3 of the 4 major divisions of the company. So there you go.
Yeah.
Keeps moving forward.
So Martin Mayotti says, what's the average of a driver's age? 55 to 60? Maybe they retired? And I think that's about the average age. It's getting up into very close, if not to retirement age. And then Catherine Whitehouse from Jonesers Express. We were told this morning by our largest retail shipper to expect an earlier fall increase due to Black Friday not being what it was. Early online ordering to receive items on the late November after Thanksgiving date. Mm-hmm. So that traditional, Q4 holiday might be pulled up a bit. Pull forward, yeah, definitely. And then Alan Johnson, regional sales manager at J&R, says, just not getting drivers from the schools like we used to. Hope we can again soon. Having to find new avenues and increase sign-on bonuses to get good driver attention. That's kind of what we saw in 2018. Maybe not on the driver school side, but driver bonuses.
The other thing was we've got with the drug clearinghouse.
Yes.
Right. That's another effect on the drivers that we didn't mention with this the crunch on capacity as well.
It is, and then driver
schools. It's just like 90% have not even taken the steps to come back, or 80% or something like that.
Of the ones who had positive testing.
And it was like 100,000 plus or something, was it not? It was a pretty high number.
It is.
Another interesting article by Linda Baker that I found interesting and wanted to bring up here during this segment was you remember Volkswagen emissions, the whole Volkswagen's emissions scandal there, where they were caught basically tweaking their cars and so on to show better gas mileage than they actually were, and so they had a large decision against them, several $3 billion to the U.S. to be used by states to replace polluting trucks, buses, and marine equipment. The program does not fund passenger cars, and there's no question that the settlement is helping fleets replace polluting vehicles with cleaner equipment. But companies are getting this money to replace 20-year-old trucks, right? Mm-hmm. Which is kind of cool. Connecticut-based food and household goods distributor Bazzuto's Incorporated was awarded approximately $1 million from the state's Volkswagen emissions cheating settlement, and was applied to purchasing 30 new Class 8 diesel-powered trucks. So he's replacing 20-year-old trucks with much more fuel-efficient trucks, and that's kind of what's going on here. It's not going towards electrified vehicles, right, or passenger cars. This money is going through there, and although it's helping. it's not going to get there. For instance, Chris Shimoda, Vice President of Government Affairs for California Trucking Association, the incentive needed to get California goals for zero-emission trucks. So they have that certain percentage of electrified and zero emissions that have to be sold by 2025, 2030 or so. Their goal is $2.5 billion annually is what they need to get there.
That's a good goal.
So this money will help a little bit, try and incent people to move towards that, but it's certainly not going to fix the situation.
No, probably won't. You can get all of these stories and much, much more on FreightWaves.com. Up next, we're going to talk about load volumes and kind of the economic numbers behind what might be for the next, end out 2020 with our lead economist, Anthony Smith.
Right.
What do we have on the ISM numbers this week, Anthony?
Hi, guys. So on the ISM, we have the latest ISM PMI number showing that there was indeed an increase for 1.8 percentage points, having it now reading at 56.0. So, of course, the ISM is a diffusion index that's based around the number 50. So anything above 50 is representative of expansion, while anything below 50 is indicative of contraction within manufacturing. And so when we're looking at this is survey-based data, so it's very much, forward-looking, so to speak, especially when we look at new orders, and new orders really stole the show in the latest update for the ISM. It increased 6.1 percentage points to now seeing a reading of 61.5 for the ISM new orders component, and that index is really indicative of more production down the line. These are new orders coming in, and on top of that, one of the other numbers that's indicative of future activity is the backlog orders, and so backlog orders are even up 2.8 percentage points, now reading 54.6, so showing that there is quite a bit of momentum behind some of this manufacturing activity that should translate into tangible results, as we have seen industrial production also increasing on a month-to-month basis.
That's encouraging news for keeping these volumes going, right? Maybe that tick downwards, you might want to revise that after hearing those ISM numbers and stuff like that, right?
I mean, it's
because,
very bullish.
Anthony, as you're talking about this, the ISM is a diffusion index, right? But then when you start looking at new orders and backlog orders, we're talking about stuff that is months down the road going to hit production, or weeks at least, right?
That's right, and that's one of the big things about new orders components. And even when looking at the ISM new orders, or just looking at tangible results that have come in from non-defense capital goods new orders, we're seeing both moving up, having some upward momentum. And the only contraction or only level that is really kind of still slow, although there are a few numbers or indices that are still under 50, is the one that I'm keeping my eye on right now, and that's the employment that's still contracting at 44.4, but it is slowly increasing. I think the term that Kevin turned is it's a little bit less worse, but employment is still a little bit slow. But speaking of employment, we did get new jobless claims numbers, and we see that that is at 881,000. But the thing to note for the newest jobless claims numbers is, although it is the second time that we're seeing that reading below 1 million and it's starting to resume its decline, is that these jobless claims numbers are now undergoing a new methodology. So that new methodology is going to affect the seasonally adjusted numbers, switching from additive to multiplicative, I believe, which is going to really actually change how the numbers are now going to be reported. And so some of that is going to be a little bit, the reading's going to be a little bit lower than it would have been had it not gone that change. And so we are seeing a resume in the decline for jobless claims, but it should be noted that there is a revision in the methodology that's being used for the numbers.
So you can't look at really 2 weeks under 1 million and say with any real analysis there, right? I mean, has it actually gone down? Did they go back and revise the other numbers so that you can tell, is it going down, is it going up? I mean, you show 2 weeks going down, but they're different methodology. Is it higher? Is it lower? Right? I mean, I guess that's the question, right?
That is, and many people are assuming that with this new methodology that there are some talks that they are expecting jobs claims to actually increase over the next week or two. But as you mentioned earlier, the previous numbers before this new methodology did not get revised. So there will be some sort of discrepancies for many institutions and analysts and economists alike when they're looking at doing some comparisons. But from what we know from the Department of Labor, this will be the new methodology going forward. Again, this should, I think, as noted by them, should reduce some of the volatility within the employment or jobs claims reporting numbers. But on the talk of volatility, one of the areas that we saw a lot of jumping around was in those lumber prices, and when we look at construction spending. And construction spending is one of the markets that has remained relatively tight. We're looking at overall real estate. And so with the latest numbers we saw from construction spending showed that there was a negative 0.01% decline, so relatively even across the board for overall consumer or construction spending. But on the residential side, we saw a 1.0% increase. So not very high, but there is quite a high amount of demand for homes. And so we are definitely seeing that segment stay relatively tight when we're looking at inventory levels remaining tight. We're looking at housing starts still kind of skyrocketing here overall. And that is really going to lead to more freight volumes as we're looking at more consumers moving into these new homes and potentially filling them up with retail goods, furniture, or those existing homes still getting those repairs done as more people take on those home projects that they've been looking at so much throughout quarantine here. One of the big things happens to be, of course, lumber prices remain very high and elevated. And so that's, of course, going to be a headwind adding to pricings for homes and potential delays for some of those projects that are being taken on by those existing homes.
Thank you very much, Anthony, for those economic insights. We'll be talking jobless claims on Thursday on the Midday Market Update. Until then, have a great one. So very interesting economic numbers coming out. Paints a very bullish picture for the freight market.
Very
encouraging. Looks, with that, maybe 75 is a little bit soft on a 3-month outlook.
It could always revise upwards.
It could,
that's why we have real-time data and analysis.
It is exactly right, and that's what we go off of.
So that's all right. There's a flavor of what's going on. Shall we talk air cargo?
Let's talk air cargo with our air cargo markets editor, Eric Kulisch. How are you doing today, Eric?
Hey, Michael and Kevin. I'm doing great out here in the Pacific Northwest. We got a little bit of smoke from the western fires here that I'm dealing with, but so I'm hunkering down inside.
Definitely so. So on your air cargo market weekly wrap-up that you do on Sunday mornings on FreightWaves.com, the last couple of 3 weeks have been pretty calm in the air cargo markets, but are we looking at another run-up in prices?
Yeah, I think so. As always, you got to qualify the overall market versus which trade lanes you're talking about. Every trade lane and market segment is different. But so much attention is focused on trade coming out of China. So that's what we tend to focus on. But overall, rates are high, around the world. But the China market is the one we're watching. So for most of the summer and spring, the rates, really shot up, then they leveled off a little bit and started coming back in August. Last 3 weeks or so, we saw rates kind of level off or dip a little bit. But right now, we're seeing a swing up again. China to Europe and China to North America up about 4.5% to 9% respectively. And a real tell is the market coming out of Shanghai specifically, where you're seeing double-digit rate increases. And market experts tell me that, that's just a precursor of what's to come. Pretty much we're in a sprint now till the end of the year with the peak season, traditional peak season, shipping season coming on, and so many other factors putting a crunch on capacity that, rates should be going up probably.
Yeah, so you mentioned it, Shanghai to Europe, Shanghai to Europe market, and an 18.4% rate Shanghai increase Shanghai to the United States.
Yeah, I think there's some major reasons for capacity crunch and increased demand. I think you've outlined these in your articles over the past few weeks, and you have PPE. Number one, I guess you have grounded flights because of air passenger volumes. You have PPE demand. And then you also have something that comes along right before the holiday, which is product launch season.
That's
and
right.
That's when Apple and Samsung and all the consumer electronics launch their new iterations of iPhones and tablets and all the good things we like to do while we're at home in quarantine. So can you highlight a little bit of product launch season?
Yeah, so good points. I think Apple this week might outline exactly when they're going to come out with their i12 phone, in the next few weeks. So we should have some more certainty about that. Samsung, Sony. And so those companies want to get, when they launch a product, they don't just dribble it out or to the market. They just, they flood the market. They they charter all these all cargo freighters. And so that's going to soak up a lot of capacity because, they've already pre-booked a lot of these planes. So if you're, a run-of-the-mill or ordinary shipper looking for some capacity, it's going to get tight. But there's some other reasons as well for what's going on with the, supply and demand. And you touched on it, but also e-commerce is exploding because everyone's staying home. So there's high demand for that. You've got test kits and for coronavirus, including potentially Abbott Labs' $5 rapid antigen test that they announced in the past week with funding from the U.S. government. And so when they decide to distribute that starting in September, October, that could impact air freight capacity. And then you've got the ocean market just so capacity constrained there that some people are shifting over to air.
Yeah, those. I knew I'd forgotten a couple, e-commerce being one, and then the tightness in ocean shipping and that overflow. It's really driving up.
Yeah, I was going to bring that up. The ocean's got to have a huge pressure on it. Talking to people, they're 4 to 6 weeks out and booking capacity, and then the time of year that it is, you've already got capacity tight. You've got ocean coming in there. You've got e-commerce. You've got all these different things that are happening, and then you've got so Apple, Samsung, Sony, et cetera. When they do these product launches, they've I mean that cargo, that it's mostly cargo freighters, right? Cargo only freighters that they're using, but they're booking that in advance. So that capacity is already counted as gone, right? So that puts a tremendous amount of pressure.
And then everybody else is, you would normally use passenger flights a lot, but the passenger airlines, as Kevin mentioned, are way down with their schedules, probably, flying 20 or 30%, if that. And so there's not that capacity like there would be normally. Capacity's down overall air cargo about a third or about 30%, even though freighter capacity is up about 30%. So think about that. You got overall the freighter companies have added about 30% more capacity, and yet that hasn't dented the capacity shortage at all because there's just such a drop in passenger airline flights.
Yeah, I always go by domestic, and I always kind of forget about the international version of that because, domestically, TSA passenger check-throughs is about 33% of 2019 levels right now. But then, you have even more passenger flights grounded on international routes because international traffic, in a lot of cases, you're barred from traveling international to certain locations, but the demand or people actually wanting to fly has plummeted even worse than domestic flights here in the U.S.
Exactly, and so from the air cargo and from a business standpoint, most people are watching international because those are the big wide body freighters or planes, even passenger planes that can carry a lot of cargo and transcontinental. So that's more of a something that people watch more than even the domestic travel. And one other thing to keep in mind for a capacity crunch, right around October 1st, China's got its Golden Week, another national holiday where they kind of shut down manufacturing for a week. Everyone takes a holiday. So people are pre-buying or ordering now to get ahead of that, kind of lull in manufacturing. So, you'll see before and after that a crunch too for people to get transport space, ocean and air.
Yeah, solid points. And you see here, I mean, in the article, you point out that there's several airlines that are adding more flights, right? I mean, it's not a lot. 33% up from 29% for United Airlines and so on and so forth. Emirates is up, operating at 81 points now, and Qatar is adding more flights, and so is Lufthansa, but they seem to be on lanes that would not affect this capacity crunch, right? I mean, United is talking about Mexico, Central America, South America is where most of theirs are going up and so on, right?
Yeah, when the airlines announce capacity increases or new flights, it could be domestic, it could be a combination of some international routes, and it'll help on the margins here and there depending on the trade lane, but as far as the big high volume trunk lanes, it may be marginal impact. All the airlines are, gradually, slowly adding a little bit of capacity, but then they think, come September, October, a little later in the month, they're predicting that their travel volumes will drop, and so they're already starting to pare back their winter or late fall schedules because people are, it's after school now, kids are back in school, albeit online, and so vacation time's over. There's no vaccine yet, so until there's a vaccine, a lot of airlines don't think travel is going to increase more than about where it is now, about 30% of 2019 levels. So
with those things in mind, Eric, is there a movement now to move a little bit more towards removing those seats and using some of those flights as freighters and get in on some of the just straight up freighter cargo movement with these airlines?
That's an interesting question. We've written about that. There's still some airlines, that are operating planes where they took the seats out to make more room for cargo, and whether more airlines will continue to do that remains an open question. It's a very tricky economic equation. It costs a lot to take them out. It takes a lot of more time to load into the cabin area with the small doors versus just down in the lower deck where the cargo normally goes. So, there's some reluctance. Depends on fuel prices. If the rates on freight go sky high like they were in April and May, maybe some people, pull the trigger on that. But it's, I know all the airlines are thinking about it, but not that many are actually going forward with it other than the ones that already have.
Yeah, there's a lot to consider there. Even the destination airports and so on, the efficiency of being able to load. They're not really, Atlanta Hartsfield is not a freighter airport, right?
You're exactly right. And so from everything we've discussed, from demand to e-commerce, PPE, consumer electronics, to low, grounding of flights throughout limited international travel and a skyrocketing, like record rates on the ocean. Do you think that we're setting up for a massive Q4 holiday season? Especially with capacity and just rate increases? Yeah,
I mean, it should be a really good season for the carriers, and and the forwarders. Shippers will be paying dearly, and we're not really sure what it's going to be like in 2021, but the rest of this year should be very strong.
I would think that if the vaccine comes to fruition, right? I mean, there was talks optimistically end of October, November. I don't know what's real. I'm not in that game. It's not my specialty, obviously.
You're not a doctor?
No, I'm not smart enough to be a doctor. I went to school to become a doctor and came out in trucking, if that tells you anything. But I would imagine that would have a huge impact on air cargo, right? You're not going to ship vaccines via ocean. I hope.
Yeah, no, good point.
Yeah.
Good
yes,
point.
Definitely.
I mean, two things that I think the airlines are gearing up to be ready, and the forwarders to move vaccine whenever one's developed. But just because there's a vaccine that gets approved or whatever, it's going to take months and months to actually get that out into the population. So from a travel perspective, you and me and the rest of the flying public, it'll it'll take a long time for it to be widely available and everybody have confidence that they can fly again. But from a freight or cargo perspective, that everyone's watching that could be another capacity constraint when that comes, because everyone's going to be locking up those planes for the vaccines.
Right.
Yeah, exactly. Really good points. It's a hot, it's a hot freight market no matter what mode it is right now.
Yeah.
Truck, ocean, air, and we'll certainly keep you updated on FreightWaves.com, especially on the air side. Eric, how does our audience reach out and learn more and talk to you about stories and maybe talking to you about new ideas?
Yeah, and they'll follow us at FreightWaves.com and AmericanShipper.com, our sub-brand, and there's an air cargo page on both of those sites. You can follow me on Twitter at Eric Reports, and my email is Kulisch, Kulisch, at FreightWaves.com.
Thank you very much.
Excellent
Always great
stuff.
insights from the air cargo market from Eric Kulisch.
Yeah, lots of dynamics, right?
It is. It's very interesting, especially with the record maritime, and the demand and the capacity crunch. There's capacity crunch in all modes right now.
Yeah. There absolutely is. Yeah. There absolutely is, and for various different reasons. Mm-hmm. And I mean, it just goes to show you've got to. They all affect each other. Mm-hmm. You've got to know what's going on. Even if you're not in air freight, you got to know how it's affecting trucking and how it's affecting ocean. And if you're in air freight, you've got to be watching ocean to figure out what is going on. You've got to look at the trucking. So you've got to have your pulse on everything.
And we've mentioned 3 of the 4 major modes. How's intermodal and rail?
So intermodal and they were showing signs of life.
Yeah, they were.
And doing pretty good.
So I know that's out of all the modes it's been kind of depressed.
No, I didn't look at them this morning, but I can pull up some stuff here real quick.
And then you have this huge backhaul issue, right? Where loaded or empty containers need to go back to Asia to fulfill a lot of these shipments. And
the backhaul.
Backhauls.
The backhaul
and
issue.
that adds another layer of complexity to the whole balance of the networks of all these different modes, right? Because you can't get empty containers back to Asia. You got to ship your goods, and it constricts, ocean supply, which overflows into the air cargo market to get here, and then, of course, everything has to be trucked. From there. So it's a delicate balance that
it really is, and I've pulled it up here a little bit. So total carloads is showing strength. It's still well below last year, but it is showing strength. It was really since the beginning of July. It's been on a fairly decent uptick, and it's sitting at 20. The index is sitting at 225,703, but last year 238. Mm-hmm. Right, so it's under, but it's showing strength, and some of the ones that I always keep up here is talking with Mike Bowdendistel, et cetera. I look at the ones that he looks at to gauge strength of economy, et cetera. Right, there are certain ones. So your chemical rail has shown strength as well since the beginning of June come up. It's still again down a little bit from last year, but it is showing strength on the industrial side, which would coincide with what Anthony Smith was talking about with the different ISM numbers and the new orders and backlogs that are showing that. Obviously, auto rebounded pretty good. It's been pretty flat over the last 2 months or last month or so, but still up there. And international rail containers movement it's been fairly strong.
It has. And you just mentioned auto. Mm-hmm. Auto is a very hot subject.
It is.
But both gasoline-powered and the new alternative energies. And we have Alan Adler, our Detroit bureau chief at FreightWaves.com, here with us right now to talk a little bit about Nikola and GM and the big news today. How are you doing, Alan?
Good to see you guys. I'm doing great, thank you. Boy, what a morning, huh?
Yes. So
yeah, go ahead. Ask the question.
Oh, no. Kick it off.
Let's jump right into it. Breaking GM invests in Nikola to build the Badger pickup, which is actually, I kind of like the Badger. I like the look of it, at least some of the mock-ups.
The Badger's obviously the thing that they thought they were announcing today, and they did. But there's I think a bigger story at play here, and that is that Nikola is pivoting a little bit on the fuel cell side of things, because GM for 50 years or more, actually, going all the way back to the Apollo missions in the 60s, has been involved in fuel cells. And they've never commercialized them, but now they will, and they'll do it in Nikola's products in their Nikola 2 truck coming in 2023.
That's very interesting, right? So, I mean, is it starting out as electric and then bringing in the fuel cell at a later date? Is that what I understand, or are they sticking to the schedule?
Nikola, that's been the plan all along. The first thing that'll happen for Nikola next year, and they are on track for this, is to build in a joint venture with Iveco in Germany, the first of the Nikola Tre battery electric cab-over trucks. Those trucks will be built both in Europe and then sent in kits over here for assembly at Nikola's new plant that is just under construction south of Phoenix. And they will put those together in modules and sell them here as well. That was not the original plan because, as you know, cab-overs aren't big here.
Right. Yeah, the original plan was to build the hydrogen fuel cells in Arizona, correct?
Yes, and they still will.
They still will just be under General Motors.
The plant has 3 phases. So phase 1, which is supposed to be ready in about 12 months, will take in just the, principally, I should say, the battery electric. They'll build a handful of fuel cell trucks to get into the hands of like Anheuser-Busch, which is one of the early customers, and that sort of thing. But the real mass production of fuel cells starts in 2023.
Very interesting.
What are some of the other details of the partnership or the investment that GM took? There's
a bunch of them actually. And a couple things for GM and some nice advantages. I mean, their stock is moving a little bit today, but GM never really gets the kind of bounce that some of these startups do. They get $2 billion in equity. This is new stock that Nikola is going to issue. They have just 3 tranches really where they're locked up for a year and then for 2 years, then finally 2025 they can sell that. But they also get another $2 billion in revenue from being the contract manufacturer for the Badger, which Michael mentioned, as well as the fuel cells. So there's a lot of opportunity there. And the other thing it does for GM is that it continues to build out this question or this idea that they might just roll up all of their electric activity. You know, they've got a GMC Hummer version coming that's electric, and they've got a Cadillac that's electric, and they've got a bunch of stuff they're working on. And a lot of folks are after GM to figure out how to unlock that value. And one way to do that would be to roll up all of your electric stuff, including your battery making, battery cell work that you do with LG Chem, roll all that up and make a separate company out of it and see what happens. Because that's got to happen for them. They're not getting any respect as an automaker, hold-on automaker.
I think one of at least one analyst has been pushing for that spinoff, and I have some market numbers here. It looks like GM is up about 10% to just under 10% for the day. Nikola, though, is up 50% on this news today.
Yeah,
well, so it's a nice bounce.
The volatility world, right? I mean, Nikola has been a bouncing ball really since they came into existence as a public company. And I got to bring this up. I probably won't write this story till tomorrow, but you know, there's a player in the background on this one that we need to pay attention to. His name is Steve Gursky. Steve Gursky was the vice chairman at General Motors at one point, left the company and started his own business called Vecto IQ, which created here's SPAC time, guys, created the special purpose acquisition company that took Nikola public, okay? So this morning, I call, Mary Barrow has asked, so how much does Steve Gursky have to do with this? And she said, well, he did some introductions. But Steve told me a while back when I interviewed him that a lot of the fuel cell people at GM have been advising Nikola all along. So, you know, when you put all that together, you can't write a speculative story like that, but it sure begins to make sense now, doesn't it?
It does.
Yeah,
all the pieces are coming together.
All roads lead to Gursky.
That they do.
They do. At least in this case, you know, he's on the board, and GM. You know, Kevin, you ask what else does GM get? They get to have a director on the Nikola board now, which will be interesting to see who they pick. My guess is it's going to be Charlie Fries, who is the head of fuel cells at General Motors, and actually used to work with Charlie when I worked at GM. So, you know, he's an expert in the field and one of these guys who is just, you know, somebody that you want to keep an eye on.
They definitely do. So I guess there's a lot of people in Robinhood today buying Nikola stock. It seems like. So you have Trevor Milton on Nikola and Hyliion, and there's been a little bit of
Thomas Healy.
Thomas Healy, yes.
Yeah.
Thank you. There's been a little bit of back and forth going on there about emissions and zero emissions or renewable natural gas. Can you fill us in? You wrote an article about this, Alan.
Yeah, it's interesting too, and I tried really hard not to make too big a deal of it. And I'm glad I played it straight, if you will, because Trevor Milton is a real emotional guy, and when he believes something, he just says it. He's got what we call a high blurtability index. He blurts a lot of things out. Sometimes he has to walk them back. Sometimes he doesn't. In this case, he probably did. It was interesting on Twitter yesterday that someone responded to that story. Someone called the Nikola One. I suspect that's their social channel. Said, well, Trevor maybe didn't understand that Hyliion is doing a zero emission truck, because if you use renewable natural gas, which comes from biogas, basically you scrub it good enough, it is net zero emission. I mean, it's below zero. And if you're using that to make electricity, which is what they do, because remember, guys, Hyliion doesn't build trucks. It makes powertrains. And This powertrain that it's making that they want to do in 2023, this ERG Hypertruck, as they call it, ERX Hypertruck. This truck basically, is set up to run natural gas as the fuel source, if you will, for the batteries. They also can do hydrogen, and they have a client, a customer that wants a hydrogen version. They said, we could do anything, as the fuel source. So it doesn't matter to us. We're agnostic. Trevor Milton, who has a background in natural gas and actually had a business that he sold to Worthington Industries, another interesting string that I'll pick up in a minute. That business was a natural gas business, and he sold that in 2014. Basically, he says, I know a lot about natural gas, and I can tell you they won't make it if they're using any kind of fossil fuel. Well, they've kind of walked that back a little bit. We didn't misreport anything. I mean, we reported what the guy said, but, they're kind of cleaning up after him a little bit. That happens when you get your, guys get excited. Real quick on Worthington Industries. Worthington Industries is a big holder of Nikola stock, although not as big as it was. They've sold off quite a bit of their stake. And the current CEO at Nikola is Mark Russell, who was COO, I believe I got that title right, at Worthington Industries before he joined Nikola. So everybody knows everybody, right?
They do. It's a very small world in that area.
Yeah, no, they absolutely do. They absolutely do. So Hyliion is bringing in. So it was interesting what you said, because I thought it was totally just LNG, but now you're saying they can pivot. They're talking about they can pivot to hydrogen cells as well, right?
Right. Yeah, they said that they are. They have. They're working with. I want to say this right. Faurecia, I believe that's a French auto supplier, which also has some fuel cell expertise, as well as a joint venture of Faurecia and Michelin on this particular fuel cell application, or this fuel cell application, which would basically just be the source of hydrogen source for the battery. So it would be like a Nikola truck, but not a Nikola truck. I asked Thomas Healy last week when we talked, I said, so let's just say that there's a backlash against anything fossil fuel. Guys say California out loud here. Would you be able to go to all hydrogen if you so chose? He said, yes, but we won't choose that because we're long on natural gas, on renewable natural gas. And there's all kinds of stuff out there now that says how much supply of this there is. And again, it's coming off of farms, it's coming out of dairies, it's coming from landfills. There is an abundance of renewable natural gas. About 40% of the natural gas used in the few trucks that do use it today was renewable natural gas last year.
That's interesting, because we had Thomas Healy on the show a few weeks ago, and we've had Trevor Milton on the show, or on What the Truck, I think.
That's right.
And I remember thinking, and kind of we discussed it, is that a lot of the renewable natural gas and charging the hydrogen or the charging the battery with renewable natural gas was to get around the infrastructure problem of filling stations, and Nikola has as an $11 billion solution for that. Can you provide any details on that? Because it's a little confusing.
Okay. All right. Well, let's start with Hyliion. Hyliion doesn't need to build an infrastructure. There are roughly 700 natural gas filling stations spread around the U.S. So anybody that has a natural gas truck, either whether it's whether that infrastructure is behind the fence, if you will, or if it's a public station, there's a way to get natural gas today without having to go out and build a bunch of stations. Part of Nikola's business plan is to, in fact, build an infrastructure for hydrogen stations. Now, these go for, this is their own numbers, about $16 million a piece. If you do 700 of them, that's where you get that 11 billion figure, Kevin, that you used. And the deal there is that it's going to take more money than Nikola has to do that. Now, Milton says the financial community has said, hey, listen, you find people to buy the trucks for certain routes. Don't worry about it. We'll loan you the money to build the stations and that sort of thing. But it is a much bigger reach, quite honestly, to build out a hydrogen infrastructure at that price than it is for Thomas Healy and Hyliion to get people to take trucks now that they don't really need to do anything with. They get to pick the truck they want. Let's just say somebody doesn't like the design of the Nikola. I don't know why they wouldn't, but if they didn't, you go buy a Freightliner and you slip the Hyliion ERX into it, right? It's very simple. My initial thought, guys, was that this was a transition technology, transition fuel. I don't think so anymore. I think it probably could be the real deal, especially if California does, and I didn't get this into my story, but California, as long as you could go a certain range, I think it's about 100 miles on electricity, which the ERX will be able to do, then they'll accept you as an electric truck. So they don't really care that you're using renewable natural gas at that point because they're looking at how far can you go on electricity. And so it sounds to me like Hyliion has this figured out, at least for the near term. Could they pivot? Of course they could. They said they could if they had to, but they don't plan to. And they're pretty adamant about that.
It's interesting. I wonder how viable it would be for $11.6 billion to build out an infrastructure for, when it's just the Nikola trucks that would be refueling there.
And basically they're selling the routes.
Yeah.
And can you explain that a little bit?
Sure.
Selling the routes.
Yeah, let's talk about Anheuser-Busch. Anheuser-Busch was early into Nikola. They said they would buy up to 800 of their trucks, and they were prominent at the first Nikola World event, sort of a dog and pony show, just for Nikola and the things it does. So Anheuser-Busch is going to get the first of the fuel cell trucks when they can probably build them by hand, quite honestly. They'll get the first ones to test. The first of these stations, Nikola has put $30 million into a company called Nel Hydrogen in Norway to purchase electrolyzers. These are devices, if you will, that create hydrogen by splitting water and oxygen. And so these electrolyzers are going to basically be the guts, if you will, of the stations. First few stations will be, I think Milton told me, something around Van Nuys, California, out to somewhere around Chandler, Arizona, which is where Anheuser-Busch has distribution. So the idea is you're going to run certain routes. There's one of them. Then they're going to look at a route up to Northern California and that kind of thing. 250, 300 miles, whatever you can get. But the thought is you'll obviously start small. Some of these stations you're not going to see for 5 years. Will they have 700 stations in 7 years? It feels like a stretch, but that's the goal.
Interesting. So, and Hyliion is now delivering diesel electric hybrid trucks. Is that this year, or when is that supposed to happen?
That's now. That's right now.
That's right now, right?
Yeah, they'll finish the year with about 20 deliveries, they say. This is basically taking this electrification module, if you will, or this powertrain that Dana is heavily involved in, their Spicer electric unit. And the first one, I think Penske Transport has received. I want to say it's CR England is another customer, and there's a few that are getting multiple trucks. The other thing that Hyliion did, although they're not sold on this, is they put one demo truck with Idealease so that they can get it around and let people see it and test it out. But Healy's attitude is, hey, I'd rather just sell these things and get them into daily use at this point.
That sounds terrific, Alan. We have about 30 more seconds in the segment, and just wanted to ask you really quickly about Navistar. And I think their earnings are coming out today, and the bid for the takeover.
Yeah, okay. So that's back. That one keeps turning up, right? The idea that Traton, which is the holding company for Volkswagen's truck businesses, that would be MAN and Scania, and also one that I have a difficult pronouncing in Brazil. Volkswagen very much wants to get into trucking here in the U.S. The best way they can do that is to finish off buying the rest of Navistar. They made a bid in January for $2.9 billion. That's not going to be enough now because Navistar stock is taken off. And so we'll see what happens. But Navistar's fiscal earnings are tomorrow.
Tomorrow. So, catch that on FreightWaves.com. How does our audience reach out to learn more about your articles, read your articles, and talk to you about story ideas?
Okay. Well, probably the best thing to do if you're watching FreightWaves.com, my email is aadler@FreightWaves.com. Twitter handle is @Alan, ALAN, Adler. Like to hear from people on Twitter. We're trying to make more use of Twitter, not just from the FreightWaves perspective, but individually. We're trying to do more with that. So love to hear from people there. You have ideas or tips. We're always open for business on that too. And is that enough? Is there more?
I think that'll do it. Thank you very much for your time today, Alan. And to catch these stories, go to FreightWaves.com.
Thank you, guys.
Thank you so much, Alan.
Thank you.
Big
very
news.
interesting. Yeah,
big news and very interesting stuff.
Yeah, definitely. Now we have some good news. Some heartwarming news.
We do have some good news. So the industry bands together to grant dying truckers' final wish. So Vietnam veteran Jim Clarissa Haas reports this on FreightWaves.com. Vietnam veteran Jim Garhart's 50-year trucking career came to an abrupt halt in June after he was diagnosed with terminal cancer while in the hospital following a bad tractor-trailer crash. His wife, Connie Gerhardt, also an owner-operator, was determined to grant her husband's final wish to make one last ride in a semi-truck. After sharing Jim's wish on Road Warriors Facebook page, which is dedicated to highlighting positivity in trucking industry, Connie's post caught the eye of owner-operator Gerald Johnson, known as Trucker G, and his wife Mary, or Mrs. G, of Hartville, Missouri. They were under load when they heard this, and what he said was he called his company and spoke to the dispatcher and asked if there was any way that he could get a load from Texas and Nebraska. He said, either way, I was deadheading to Nebraska to grant this wish. So Trucker G, who is an owner-operator contract with Cargill, said his dispatcher called him back within 10 minutes with a load going to Schuler, Nebraska, which is about 20 miles from where the Garharts live in Duncan, Nebraska. And a few days later, Trucker G and Mrs. G pulled into the Gerhardt's driveway to fulfill his wish. They also ride with a sizable check to help with expenses, since Connie also had to stop trucking to care for her terminally ill husband. We got there. He was overjoyed, and we were able to give him a sizable check that brought a tear to his eye. Trucker G said, as a husband, your number one concern is providing for your family, and when you can't provide your family, that's a huge stress. Donations continue to roll in from truck drivers, and Trucker G's own pocket, and his motorcycle club agreed to match any amount that he raised. So really great stuff.
Really great, heartwarming stuff. The trucking industry is known for this, and it's great. Every day we come out with a heartwarming story like this, So it's great. Coming up at 2 p.m. on FreightWaves TV is Great Quarter Guys. It'll be me and Andrew Cox with our good friend Ben Gordon.
Oh, nice.
From Cambridge Capital. He'll be joining us to talk a little bit about Final Mile and probably the Hyliion and Nikola stories as well, as long as with some automation. So. And then Wednesday at 12 p.m., we have Put That Coffee Down. Dooner and I will be talking about, brokerage reputation, how to ensure that you're thought of as honest and ethical, and kind of plans and processes for your freight brokerage business on that, because we know when rates go down, brokers are the scum of the earth, and when they go up, they're the scum of the earth to shippers. So
exactly.
It's always in the middle. And then we'll be back here Thursday at noon for for another edition of Midday Market Update. Any takeaways?
Yeah, well, hey, let's not forget the Global Trade Tech presented by
That's
American
right.
Shipper is the 16th and the 17th, 2020 virtual
Next
event.
week.
Registration's free. Go to FreightWaves.com. Register. Going to be a great event. Have a
Yes.
great afternoon, everyone.